All right, folks. So, welcome to this session. This is Mark, as I mentioned. In any case, we are here to discuss about what to expect from the ECB later on. Now, we of course know that there is nothing to expect out of the actual rate announcement. In about 30 minutes time, we will hear from the ECB, and they will say that they will keep rates steady at 1%. What is really more important for the market is what will Mario Draghi say in his speech, and the ensuing question and answer portion with members of the press. But let's talk about what the ECB has been doing lately. We've had a lot of changes in the ECB since Mario Draghi took over. For one, against all expectations, Mr. Draghi decided to cut rates in a succession. He cut rates twice since he took over last October. Those rate cuts were followed by a massive LTRO program. The LTRO program worth about 4.98 billion euros that they did last December was basically meant to make sure that the European banking system will have money, that the European banking system has the funds to deal with the problems that Mario Draghi expects will be happening over the next few months. And what are these problems? We've heard about this problem over the last few weeks. Okay, it's spelled as GREEACE. Okay, so what about the Greek problem? Greece is going to have an election in April. They need another bailout at this point. They need 130 billion. If they don't get this latest bailout money, it opens the possibility that Greece will be forced to default on its obligations that will be due in the middle of March, around March 20. Why is this so critical? Even the German finance minister has already admitted that at some point Greece will really have to default. However, they don't want that default to happen now. Okay? Europe is still in a nascent stage as far as fixing its problems are concerned. A default by Greece at this point in time, when the rest of the Eurozone is also weak, would probably create a big problem for the banking system. Let us remember that what is happening right now is that the governments, the EU, along with the Greek government, is forcing private bondholders to take a haircut on Greek debt. They're now forcing an 88% cut if a private bondholder is not willing to roll over the debt of the Greek government. Now, they're able to escape with this idea by saying that if a private bondholder or if we implement this rollover program, this is not a default. Okay, we're not saying that Greece will not be paying private bondholders. We're just saying that if you own a Greek bond and you decided to not to roll over the debt now, not to roll over the debt this March, then you will have to take a haircut. Instead of getting $1 for dollar in debt that instead of getting the full face value of $1 that you supposedly own, or a euro that you supposedly own, you'll be getting only 25 cents. Okay, so the idea is you're still going to get paid, which means that Greece is not defaulting. Now, the European governments, the Greece, they're using this as an excuse to avoid potentially a big problem. A big problem would be if somehow Greece is forced to default. If they can't even pay that 25 cents to the dollar, then that will be a default. And if that happens, a private bondholder can now go to the banks that sold them CDS, that sold them credit default swaps, and tell those banks, hey, you told us that if we buy Greek debt, if we invest in Greek debt, and we will pay you $20,000 per million or $10,000 per million, you're going to insure us, you're going to guarantee that we will get paid when the time comes for Greece to pay. So, if the Greek government does not get this latest bailout fund, effectively what will happen is come March, they won't even have the money to pay that 25 cents to the dollar after forcing a haircut on a private bondholder. They still won't be able to pay. And should that happen, private bondholders can now go and sue the banks that issued them, that sold them their CDS insurance. And unfortunately, most of the banks that did this are European banks, are French banks. So it will create a ripple effect. As much as possible, people in the Eurozone would want this next bailout facility to be given to Greece, but so far the socialist parties in Greece have said that we will not agree to the conditions that the Eurozone, the IMF, the ECB is imposing on us. They want cuts in wages. Fine, we will do that. They want cuts in government spending. Fine, we will do that. They want cuts in pension payments. That the socialist politicians in Greece are not willing to agree to. So because of this, there's that threat of a default situation happening. Now, whether Greece will come to a default this March or not, the ECB is actually taking steps already. Okay, this is why I'm talking about Greece now, rather than talking about what the ECB is what we're expecting from the ECB. Okay, that was just a preamble. Because of all these problems, despite the massive LTRO program that the ECB introduced last December, the ECB is actually planning another LTRO program. At the end of the month, on the 29th of February, yes, this is a leap year, so there's going to be a 29th for February. On the 29th of February, the ECB is expected to introduce another LTRO program. What did the banks do with the money that they had from December? That money is supposed to make sure that the banks have enough money to face any crisis situation, maybe lend out to businesses that they think are viable. What they did with the money, they're smart. They just deposited it back in the ECB. So effectively, the ECB is getting cooked with the money that it lent out. So all that money has actually been deposited back, or most of that money has been deposited back in the ECB. Some of it has gone to the bond market. That is why your bond yields last January were a lot lower than where they were in November, December. Okay, because of this liquidity. And now the ECB is expected to introduce another LTRO program at the end of the month. So here's one of the things that we would want to hear from Mario Draghi during the press conference. Remember, we don't really care about the actual rate decision. We know that it will be steady. What we care about is what will happen, or what will Mario Draghi say. So one of the things that people will be looking out for, will be asking him, would be how big is this latest LTRO that you're suspected will be doing, that you're suspected to do this end of the month will be. Current rumor calls it at 250 to 350 billion euros. Let me point out that when a country prints money, it's supposed to be bad for the currency. Now, in the Greek situation, or rather in the European context right now, though, because there is so much fear that the banking system will become insolvent, that the economy will go back into a recession, that there's just no money for businesses to tap into, we are expecting the opposite impact. Instead of freshly printed money weakening the currency, a 250 billion infusion by the ECB into the economy will probably have speculators think, oh, that means probably we're not going to go into a recession. There's a lot of liquidity already. That means that the stock market will rally. And you know what market has been doing for the last 2 years. Whenever the stock market goes up, people would start saying, hey, that's a good excuse for us to buy the euro, buy cable, buy Aussie. So later on, if we get to hear from Mario Draghi and he gets to confirm the amounts involved for the LTRO in the 29, the bigger that amount would be, the more that it would actually have a positive impact for the euro, contrary to what your economic textbook from college, from university told you. Okay? Your textbook in economics from university told you that it is supposed to weaken the currency. Under the current market circumstances, the bigger the LTRO program would be, the more that the markets would like it in terms of pushing the stock market up, and then the euro along with it. So correlation play would likely set in. At least that's what we would expect as a knee-jerk response. Now, what else will the market be asking the ECB or Mario Draghi during his press conference? Another important issue for the Eurozone right now is how much participation, how much of a hit is the ECB willing to take on Greek debt. Remember that to support the Greek economy, the ECB has actually been actively buying Greek debt. Okay? To support the banking system in Greece, the ECB decided to accept Greek bonds as collateral for banks that needed money. And now with this haircut being forced on private investors, some quarters, private investors are also saying, if we take a hit, governments should take a hit as well. So the ECB before said that they are not willing to negotiate on this point, that they will not take a hit in their balance sheets. That was during the time of Jean-Claude Trichet. The line of the ECB now has changed. Lately, Mario Draghi has been willing to be more accommodating. He's been willing to take a hit, to take a loss on ECB bond holdings as well, Greek bond holdings as well. So, what would be its net impact for us as far as currency trading is concerned? That, my friends, is something that I would have to admit is a big question mark for me. Let's put it this way. The capital of the ECB is only 10 billion euro. How the heck can the ECB take a hit on its Greek bond holdings? Remember that the ECB, although it's not supposed to be the lender of last resort in the Eurozone, is already acting as the lender of last resort. It is holding a lot of these Greek debt as collateral from the banks. Now, if you're a bank, you borrowed money from the ECB, and in exchange you gave them your Greek bonds as collateral, would you, if a default situation happens, or if a haircut happens, would you be actually willing to go to the ECB and say, hey, here's more collateral because I know that the collateral I gave you is no longer worth as much? I don't think so. I mean, if you're a businessman who mortgaged his house in order to put up a new business, probably will not go to the bank and tell the bank, hey, I know that the home prices are dropping, so here's another house that I could add as collateral for the loan that I took. I don't think so. So, what I'm trying to get at is, technically, if the ECB does take a hit, it would be bad for its balance sheet. It would technically be bad for its ability to influence the economy. Of course, it could opt to just print money. But there's also a good side to it. If the ECB takes a hit, then perhaps private investors will be more willing to cooperate when they see that everybody's being treated equally. That even multilateral institutions are also doing their part to prevent a total collapse of the system, and that they are not being left holding the bag. So this is a big question, and frankly, unfortunately, I'm not even sure how to answer where your euro would be going under these circumstances. On the one hand, it's bad for the ECB. On the other hand, it probably would boost confidence about the fairness of all the pain that the private sector is going to get. Now, all of this said, what are we supposed to do now as far as trading is concerned? What are we supposed to do with our euro? Let us take a look at our charts. By the way, if you folks have any particular chart that you'd like us to look into, just tell me about it, and we will take a look. So, what do we find interesting in our charts? From the big picture, what am I looking at? From the big picture, we actually have a bullish set of signals from our indicators. Sorry, let me just do something here. Okay. From a big picture, we actually have a bullish set of signals from our daily indicators. We have our daily EMAs acting as a support. We've managed to see a breakout. We have managed to push to 32.44. We've managed to stay above 32.44. What is 32.44? 32.44 basically represents the 38.2 fib retracement level. Sorry, I'm having trouble with my fibs here. Excuse me. Let me just fix my charts, guys. Okay, there we go. So 32.44 represents 38.2 fib retracement of that big sell-off in your chart from late October in your euro. For a long while, I've been calling a bear market in euro. I've been saying get to 32.44, 38.2 fib, and then look at selling. But because we have a daily close above it already, with our confluence of buys in our daily indicators, I tend to think use that 38.2 fib, use that 32.44 area as a bounce off point. Okay, let me just add something here. Sorry, let me just add this symbols. As I said before, this isn't my usual chart. This isn't the usual platform that I use for putting indicators. I use it for testing custom indicators. So I actually haven't prepared it for use in classes. All right. So looks like in this platform, in this chart, that 38.2 fib is at 32.43. In any case, that's a very small difference. So again, I look at this and I tell myself, why not think about using that area as a floor? You look at the daily picture, you managed to close above that resistance level. You managed to push above the congestion that you've had for the last 2 weeks. And you've got buy signals from your daily indicators. You even have a bullish bias from your candlesticks. But how are we faring right now intraday? In 4-hour charts, we have a bearish divergence. Okay, this could be a problem. We have a bearish divergence in our stochastic. What else? We have a bear cross out of our 4-hour MACD. Although we are working that 32.43 support level. We also have our actual congestion resistances acting as another area for support, your 32.14 region. So you have some sell signals in the 4-hour picture, but you have good supports to work with. Hourly level, what am I getting? Hourly charts, you have more bear signals. Your stochastic is oversold, your MACD is dropping. Now here's the question. If you know that you're around the support level, would you actually sell? Normally, when we are at the support, we tell ourselves, or rather, we have this adage that we use in the market, buy low, sell high, buy at the support, sell at the resistances. So because I find myself with supports at 32.43, 32.14, despite the sell signals that I have in our charts. Hourly, 4-hour picture, I'm telling myself, don't do anything. Remain neutral. Now, let's tie in the ECB decision. The ECB will not likely cut rates. That's a given. If they do cut rates, if they do surprise us, then of course that's an automatic sell. Everyone is expecting things to be steady and there's a rate cut. That's an automatic sell for me. But if we hold things equal, no rate cut, then to me, those supports will hold. And then I will look at what will Mario Draghi say. If he talks about printing money, if he confirms for us that there will be another LTRO at the end of the month, and they're planning a 250 billion pound to a 350 billion pound move, then to me, that is a confidence building measure. Okay? By printing more money, it tells us that the ECB under Mario Draghi is willing to confront the issues of illiquidity, the difficulty that businesses find in getting loans, in getting money. So this is one instance where we won't be following economic textbook, where printing money would actually be good, because we're expecting it to help shore up what is essentially a weak economy. So we get to hear that, and that would reinforce the notion of getting a bounce off our support levels later on. Okay, so we'd want to remain just where we are, or maybe around 32.15, 32.20 by the time Mario Draghi starts talking. And when he tells us that, yes, I'm going to print money, I'm going to do LTRO, that to us would be good news. If he tells us that, yes, we're willing to take a haircut as well on our Greek bond holding, that becomes a confidence building measure, and that to us will be an excuse for the euro to bounce off the support area. The nice thing about this, we are very close to those support levels. We can use tight stops if we do decide to get in and do something. Now we're just less than a minute away from this announcement, so for now, let's just let me just shut up, wait for those figures to come out, and then we'll see what we can do. Again, we don't expect anything, actually. We don't expect any rate action. And we are not moving. It should be out by now. I guess Navas, I don't really expect it to move the market much. What is more important is the press conference later. Thank you, Gonzalo. Okay, guys, textbook says that if your interest rate goes down, your currency would weaken. If the interest rate goes up, it will strengthen. But this has been well communicated. Michael, I'm using 21, 34, 55 daily EMA. Thank you, Soleiman. So no change. Not that it's not that anyone was expecting it. Again, this does not warrant any big knee-jerk response from us. What matters is what's going to be said in the press conference. You hope that market will touch 3150 today. 3150 is right around here. To do that, sorry. To get to 3150, wow, I don't know how you can get there. I'd love to get there because that would be a nice place to look for a buy. But I guess if we have a poor performance on the stock market, we may get your euro down to that 3150 area. For now, the equity markets are just stuck in a range play. That range play in plus territory, so I wouldn't really be expecting that we will get there. Okay, let me move on to other euro pairs. We're not moving in EUR USD. Let me take a look at something else. I was actually short in euro yen earlier. Let's see what happened with my short. 31. Well, let's put it this way. We are well supported in EUR USD. We have a strong support at 32.43. That's a daily level support. And we have a good resistance before at 32.14. And that would make a moderate support level. So in order for euro to drop, you're going to have to get bad news. And the only bad news that I can think of would be if the stock market sells off. Without a sell-off in the stock market, I don't see how euro can get to 31.50. We are just well supported that I would doubt sellers would be willing to come in right now. Excuse me. Again, the most basic idea in technical analysis is support and resistance. Oftentimes people forget about it. We like our indicators. We like our expert advisors, and we forget that indicators, expert advisors, they're all based on some math. They're all a derivative of what the prices are doing. And the most the easiest way of telling yourself what market is doing according to prices is looking at support and resistances. So for me, if you're at a support, the only thing to do is to look for buys. Unless you actually push under that support, you close below that support level. So I have my doubts about getting to 31.50. I'm not saying it's impossible, but to get there, one of the things that you will be seeing at the same time would be a sell-off in the stock market. So if your CAC 40, your DAX, FTSE, if they go negative, then there's a good chance of us seeing 31.50. Only under those conditions. Okay, you were supposed to look at Euro Yen. I was actually short in Euro Yen earlier, but I didn't stay in for too long. Let's discuss why was I short in Euro Yen. Unless, of course, someone else has some other question. For one thing, I looked at EUR-JPY and what did I see? I saw that yesterday we had okay, a lot of people have often mistaken equity trading and have often mistaken correlation as 1:1. Okay, it can't be 1:1, or it's not 1:1. So I would agree with Will. There can be lags between equities and the currencies. In fact, I would point this out, guys. It would be better if, say, you want to trade the correlation. You put support resistances in your equity chart. If the support in your equity chart gives way, then look at your euro, see if the support in euro is still there. If it's still there, then expect it to give way as well. Or if you find yourself around the low in your I would advise that as well, but I've seen days where your equity chart and your bond market are both going in the same direction, which in textbook should not happen. I tend to give more importance on the correlation with the equity market than with the bond market. Yeah, I've had days when I go crazy. What the heck should I do now? Bond markets are going down, equity markets are going down. Especially when gold is also going down. Well, under those conditions, you just buy the dollar. Well, if that happens, normally my solution is go buy the dollar. Navas, again, the interest rate decision is a non-issue. It's as expected. Everyone was expecting it. It's not going to move the market. What will be more important is the press conference. And in the press conference, we will look for two things. We will look for a confirmation that another LTRO will happen on the 29th. The more massive the LTRO, the more bullish I would be for Euro Yen, for Euro USD, for the Euro in general. I don't think that we can go 31.50 today. We have a strong support at 32.43 and then another moderate support at 32.14. We need to push through those supports to get to 31.50. And right now, I just don't see how we can get there. We don't have the catalyst to break lower. But wait for the speech of Mario Draghi. Wait for the press conference. That press conference could give you something. Okay. Let me get back to that Euro Yen. So essentially, what do we have in Euro Yen, guys? We are well resisted at that 102.48, 102.50 region. If you look at your previous chart, this is the daily level. It's acted as a support. It's acted as a resistance level. Because of that and because of the spinning top that we had from yesterday, I was thinking our earlier push up was a false breakout. Yes, you have a confidence to buy some of the daily indicators, but unless you actually close above that strong resistance level, I wouldn't be a buyer. Ashley, not yet. You go intraday and what are we getting? 4-hour charts, we have a bearish divergence just like in your euro. You have a bearish divergence in your stochastic. You're flat now in your MACD. And okay, that's it for the 4-hour picture. You go hourlies and, well, one of the reasons that I shorted was you had a bearish engulfing earlier. So, told myself, okay, bearish engulfing typically would mean you're likely to get a bear market. You may even get a 3 outside down pattern. I was hoping to get a 3 outside down. So, I jumped in, but we were getting close to our rate decision. Again, it's better for people to have no positions when a big announcement is happening. So I decided to get out earlier. So I'm now actually market neutral now. I only made about 18 tips on that one. Aussie. Okay, let's take a quick look at Aussie. What do we have? If we look at the daily picture, we find ourselves with a bearish stochastic now. We have a bear cross in MACD. So daily indicators indicate that we have lost momentum. If you look at your candlesticks, they're neutral. You go 4-hour level. So we may have a good trend if you look at your charts. But according to indicators, according to the candlesticks, we have lost bullish momentum. Move to the lower time frames, and what are we getting? Mixed signals in 4-hour charts. A possible double top is forming. Okay, we could get a double top there. Go to the hourlies, and what do we have? We have a new confluence of bears. There's no particular bearish pattern from the candlesticks, but bias in the candlesticks is for the sell side. So I won't be the first to pull the trigger on a sell in Aussie, but I would look at this and tell myself, why don't I go for a sell on rallies? If we approach the earlier highs, look for shorts from, say, just below 108.22. Stop losses above yesterday high of 108.42, so maybe a stop loss at 108.50. Your target is to get to your 107.38 price point. So we have a bearish bias, but you don't have momentum. You're in the middle between, you're in between your target and your stop area, that this is not a good place to short from. I'd love to, but I don't think this is the right time to do this. Excuse me. All right, guys, I've run out of time. So again, let me just go through our key issues. Again, watch out for what Mario Draghi would be saying about the LTRO. If he confirms it, and if it indicates a huge amount of money, that would actually be a plus for the euro. Also, see if watch out for what he's going to say about the possibility that the ECB will also take a hit in this Greek haircut. Anyway, folks, thank you for joining this session, but we've run out of time, and I guess I will see you next week.